until the ECB, and this is going to be the key part of this two-pronged attack from the ECB. This is their normal style. They have the rate decision at 12:45, and then we get the press conference. And as is normally the case, the press conference is where ultimately the greater opportunities lie from a trading point of view. So a quick recap of what we have seen already. We've had the monetary policy decision. And as you can see, as I shared with you at the time, that was 15 minutes ago or so, a almost complete copy, paste and repeat from September in the fact that all three interest rates on hold, and more importantly, the monthly asset purchases of 80 billion are intended to run until the end of March 2017 or beyond if necessary. There was potentially a very small outside probability that they could have moved that end date, and then they would have changed this last paragraph to say we will then talk about that in the press conference. That has not occurred, which is in fitting then with the majority of expectations, and hence fairly muted reaction seen in European asset classes post the 12:45 announcement. You can see here on my DAX middle left, you had a little blip lower. That's likely a bit of unwinding of those getting out of sitting on the premise of a speculative position of what if they extended that. Obviously DAX would have shot higher, so probably just getting carried out on some of those light positions. Likewise, in terms of the euro currency, we kind of gravitated towards pivot going into the presser. One thing is though, you have had a slight uptick in the DAX, although it's not really lasted too much. We did have some positive news just come out actually for Deutsche Bank in the last 20 minutes or so. And that was Manager Magazine saying that Saudi's sovereign wealth fund and Chinese investors would look to raise their stake in Deutsche Bank to 25% in case of a capital increase. That's actually a very positive sign for a bank who you'd be expecting people to be overly cautious with investing in at this point. So certainly that's a very credible backing for them. And so Deutsche shares are actually up around 4% when I last checked. They've seen a bit of a spike on the back of that, so worth noting. But back to the ECB and what to look out for. And technically what I want to show with you here is something which Will was looking at this morning, and that's the current setup of the euro going into this event. And there's a couple of real key points here to identify. And that is where we are right now, where we were in kind of late July, and then the Brexit, the big move that we had on the back of Brexit. Remember, in terms of euro dollar, obviously that powered lower in sympathy with sterling, big fears of contagion after that shock vote to leave the EU. So there, where we're looking at now is we bounced off that level quite aggressively around late July. We rallied through August. Then we it's been very sideways price action really between I'd say 111.50 up to 114 kind of handle. But more recently, we've seen a downward move in euro dollar. And where we are at the moment is retesting technically that key level. And then also below here, obviously we're opening up some distance around 30 pips below to the Brexit low. Obviously, if these are key psychological levels, other traders will be looking at it, and then it becomes almost self-fulfilling in terms of how important these technicals are, and if broken, the downside momentum could be great. In terms of a flush lower, obviously 109 would be first target on a break of 47, but ultimately that then opens up technically the 108.22.5 mark to the downside, which then puts us back down towards the beginning of the year in springtime in March, which acted as support at those levels. So certainly if there's a dovish tone to what Draghi says today, i.e. he gives a very concrete hint towards they're definitely going to extend and they're going to do it in ABC measures. We've already decided. Very unlikely he's going to be that clear and concise, but if that occurred, then certainly this could come under some pressure very quickly. Don't forget as well, obviously a lot of this movement we've seen of late has been on the back of dollar appreciation. The back of the persistently hawkish Federal Reserve has weighed on this pair by a large degree. And so if you start getting the ECB talking about being dovish, the Fed are talking about being hawkish, policy divergence goes to its most extreme value, and that's going to be negative for the pair overall. Okay, jumping back to the press conference then, and a couple things, words of notes to look out for. This was a good article in the FT. Vas sent it out in your morning research this morning. You've still got time to have a read. But in summary, a couple of key things you need to be aware of. For one, the ECB came out last month with what looked like a delaying tactic. And I would say that there's a strong possibility that today could be a repeat of that, i.e. a kicking the can down the road exercise, which they'll then be using central bankers to talk. Remember, there's no meeting in November for the ECB. So between now and December is quite a large time frame in the world of financial markets in this current environment. And so therefore, I think that they will probably likely kick the can down the road, very similar to what we heard last time. And then they'll use ECB speakers and sources, like we had with that taper tantrum article out of Bloomberg 2 or 3 weeks ago, to then communicate then an overall decision they might they might do in the month of December. So few expect those committees to reach final conclusions in today's meeting. So in fitting with what I was saying, that's kind of the general feel for today's meeting. The ECB has won some time thanks to recent economic data showing the Eurozone recovery still more or less on track, as well as a sell-off in bonds that has raised yields, so easing concerns that the bank could run out of eligible assets. Now, on that note, I want to quickly flick over to this chart from the FT. And if you remember, one of the biggest problems the ECB are running into at the moment is the eligible universe of bonds to buy has been diminishing because of ever decreasing yields. However, what we've seen more recently, probably more acute in the UK, is now prices are starting to rise and rise at a fairly rapid pace. And this has caused yields in not just the UK but globally to rise in the long end of the curve, and therefore bonds have come under pressure. What that's meant is that this month's sell-off in Eurozone government bonds has reduced the universe of negative yielding sovereign debt by 425 billion euros. So if there were any concerns about the amount of bonds that the ECB could buy, well, actually, the last month has been favourable for them to just sit on their hands and do nothing. The actual total amount of negative yielding Eurozone debt now is only 2.95 trillion compared to 3.37 trillion a month ago. So is there any need for them to do any drastic changes at this point? So that's obviously an interesting point to take home at this current juncture of policy. The other thing we're looking at is tapering, and obviously this word caused shivers down many traders' spine when the Fed first mentioned this word. We had taper tantrum. That was when the markets went into a high bout of volatility on the back of this stimulus that's propped the market up for such a long time was going to be removed, and the market didn't like it. And so when we had this Bloomberg source comment only a few weeks ago, you saw the euro appreciate rapidly, because no way are the ECB at the point of tapering right at this specific point in time. But they will, ultimately, the time will come. But most of market consensus is leaning on an extension of policy going forward. Now, that's not to say that tapering might not be mentioned today, but it will probably be mentioned in a way that they have not talked about tapering. Not that they are going to taper, because otherwise that would be too hawkish a signal for Draghi to sound at this particular point. So tapering is a key one. Negative rates. So as the FT have deemed it, while no one expects rates to rise at any point soon, the banking lobby's complaints that negative rates are eating into their profits are now acknowledged by many members of the ECB's top-ranking executive board. Really, negative rates have run their course to some effect. Now, with the Bank of Japan, they've obviously decided to target specific yields. They've done some tweaking of the parameters of the QE program because they know that there's a depreciating return of continuing to cut rates into negative territory. Same with the ECB. We're now at a deposit floor of minus 0.4%. You can't just keep cutting. So this is why we get down the route now of finding other ways to work policy, so to speak. So negative rates are kind of to a lesser degree, but there is the possibility that they could either lower that as a boundary of QE, because remember, negative 0.4 is the cut for the bonds in which they can buy and which are legible for their program, but they could actually lower that amount if they saw it as a viable option. The other interesting point here is Portugal. Now, you've heard me talk about Portugal this week. That's because on Friday, DBRS, which is the fourth, let's say, of the hierarchy of important rating agencies after S&P, Moody's and Fitch, it's DBRS that could potentially cut Portugal to junk, which would put them at junk on all four, and then Portugal starts to fall out of what can be deemed as acceptable as the parameters of the purchases they can make of sovereign debt. So that's going to be a key thing as well, and he may be questioned on that. Okay, quick wrap up of some other things in summary then. I think Nomura does a nice job on this, on the 5 kind of possibilities. So this is what I want you guys to focus on. So this week, the ECB may communicate the following. 1, no details as to the future path of QE. That being just a delaying tactic, we just move on. Number 2, indications about extending QE further. Now this could be definitely something which we could hear from the press conference. What I'd be looking for are terms as in how far and to what depth has their discussion gone in the research that they've done, and how far down the decision-making line have they gone to making an overall judgment on whether they can tweak and in what way they'll tweak the parameters in order to supplement the extension of QE going forward. Timelines of QE could also be interesting. SEP DEC 2017 probably seems the most viable. Unlikely they're going to mention something that explicit, but again, these are things to be aware of. Indications of approaching tapering. This would be point 3, and this would be the most hawkish scenario. This would see an aggressive rally in the euro currency and would likely see the DAX come under aggressive selling pressure if that were to occur. Then, if the ECB is inclined to extend QE further, we will see 3 likely options for the bank to enable the extension. Departure from the capital key. I know Vas sitting right there. He wants to see some action on that. And definitely, if they want a more powerful way of doing it, that certainly is the logical step. 2B would be removal of deposit rate floor. And then third, 2C would be changing the issuer limits. So these are the kind of slight tweaks which it could go through. Okay, so back to the charts and a final summary of what to look out for. What I would say is that he delivers the statement. He doesn't begin exactly at past. He'll normally start a few minutes after. He'll deliver an opening statement, which normally lasts for about 20 minutes. Sometimes it's not what he says, it's what he doesn't say in that first few sentences, which will give away really the tone, whether it's going to be neutral, hawkish or dovish. So listen very carefully at the beginning. The first few minutes are key. Then as he goes through the statement, it becomes lesser important. But then we go into the Q&A. And the Q&A will also be where journalists, no doubt, will be questioning him about how far they've progressed with their talks about QE, how viable is December to price in what probability of that happening, and in what fashion would they change the parameters around QE if they were to extend it. They're the key things to look out for. Any significant nod towards the latter, so bedding in an expectation of December action, would likely lead to a commitment of the ECB being more dovish. Therefore, as per those levels we were just looking at, well, on that daily continuation chart, be aware of some downside key levels in the euro currency. You got 0977, 47 Brexit low, and thereafter 109. On the opposite, if that's not even spoken about and they talk about tapering, then you need to be buying that euro because it's going to shift pretty quickly to the upside. And I would imagine the DAX is going to come under significant pressure. Okay, guys, good luck. The more experienced people, you'll know about the timings are key. And you need to be switched on for the next hour. Yeah, the first few questions in the Q&A are always key. They're when the more notable journalists will ask the more interesting questions to put Draghi under pressure. He is hell of a slick operator. Unlikely he's going to make a mistake, but stranger things have happened. And that's where the trade might come from. Okay, guys, good luck. And I'll be on the mic helping out.